Welcome dear students and scholars. In this ASC 215 MCQ practice video, we will quickly test the main ideas from Statement of Shareholder Equity. This is not a memory test of long technical wording, it is a concept check. We will look at 6 questions one by one, and after each question, we will immediately discuss the answer. Try to think like an accountant. What is the statement showing? What is changing? And why does the movement matter? Here is how this practice will work. First, you will see the question with 4 options. Read it carefully and choose your answer before moving ahead. Then, on the next slide, we will review the correct option and also understand why the other options are not correct. This style is useful because active recall makes learning stronger. So, do not only watch passively. Pause when needed, choose honestly, and then compare your reasoning with the explanation. Let us begin with question 1. What is the main reporting idea behind ASC 215? Your options are A. To calculate income tax expense, B. To explain changes in shareholder equity, C. To measure fair value of assets, D. To classify leases as finance or operating leases. Think about the name of the topic, Statement of Shareholder Equity. The keyword is not tax, fair value, or leases. Take a moment, select the best answer, and then we will check it. The correct answer is B. To explain changes in shareholder equity. ASC 215 is connected with the presentation of the Statement of Shareholder Equity, which shows how equity moved during the reporting period. Option A is wrong because income tax expense belongs to tax accounting topics. Option C is wrong because fair value measurement is a separate area. Option D is wrong because lease classification belongs to lease accounting. So the main idea is simple. ASC 215 helps explain the movement in shareholder equity. Now question 2. Which formula best represents the basic equity movement logic? Option A says ending equity equals beginning equity plus increases minus decreases. Option B says ending equity equals assets plus liabilities. Option C says ending equity equals revenue minus expenses. Option D says ending equity equals cash received minus cash paid. This question is testing the heart of the statement. Do not overcomplicate it. Which option moves from the opening equity balance to the closing equity balance? The correct answer is A. Ending equity equals beginning equity plus increases minus decreases. This is the basic reconciliation logic. We start with the beginning equity balance, add items that increase equity, subtract items that decrease equity, and arrive at ending equity. Option B is not correct because assets plus liabilities is not the equity movement formula. Option C explains income, not total equity movement. Option D is closer to cash flow thinking, not equity reconciliation. Let us move to question 3. Which statement best describes the difference between the balance sheet and the statement of shareholder equity? Option A says the balance sheet explains all equity movements in detail. Option B says the statement of shareholder equity shows only assets and liabilities. Option C says the balance sheet shows ending equity while the equity statement explains the movement. Option D says both statements always show exactly the same details. Think of one as a snapshot and the other as a movement story. The correct answer is C. The balance sheet shows the ending equity balance at a point in time, while the statement of shareholder equity explains how that ending balance was created during the period. Option A is wrong because the balance sheet does not normally show the full movement detail. Option B is wrong because assets and liabilities are not the focus of the equity statement. Option D is wrong because the statements are connected but they do not provide the same level of detail. Now question 4. Which item normally reduces shareholder equity? Option A, net income. Option B, issuing new shares. Option C, declaring dividends. Option D, Additional paid in capital from a share issue. This is a practical question. Ask yourself, which item represents value being distributed to owners or taken out of retained earnings? One option usually reduces equity, while the other three normally increase equity or support equity. The correct answer is C, declaring dividends. Dividends generally reduce retained earnings, and retained earnings are part of shareholder equity. That is why dividends normally reduce total equity. Option A is wrong because net income usually increases retained earnings. Option B is wrong because issuing new shares usually increases common stock and additional paid in capital. Option D is also wrong because additional paid in capital from a share issue is normally an increase in equity. Let us go to question 5. Why does ASC 215 naturally lead to ASC 505? Option A says ASC 505 provides deeper guidance on equity accounting. Option B says ASC 505 explains inventory valuation. Option C says ASC 505 replaces the statement of cash flows. Option D says ASC 505 is mainly about revenue recognition. This question is about the learning path. ASC 215 gives the presentation frame. Which ASC topic takes us deeper into equity accounting? The correct answer is A. ASC 215 is a presentation bridge, while ASC 505 provides deeper guidance on equity accounting. ASC 505 takes us into topics such as treasury stock, stock dividends, stock splits, and other equity transactions. Option B is wrong because inventory belongs to inventory accounting, not ASC 505. Option C is wrong because the statement of cash flows is a separate financial statement topic. Option D is wrong because revenue recognition belongs to revenue guidance, not equity guidance. Now, the final question, question 6. Which statement is a common misunderstanding about shareholder equity? Option A says equity is affected by net income and dividends. Option B says equity is the same as the company's cash balance. Option C says equity is connected to owner's residual interest. Option D says equity movements help explain changes during the period. Three options are true ideas. One option is a misconception. Your task is to find the incorrect idea. The correct answer is B. Equity is the same as the company's cash balance. That is a common misunderstanding, but it is not correct. Equity is the residual ownership interest after liabilities are considered. It is not simply the cash sitting in the bank. Option A is true because net income and dividends can affect retained earnings. Option C is true because equity is linked to owner's residual interest. Option D is also true because the statement of shareholder equity explains period to period movement. Let us quickly revise the 6 ideas tested in this practice. ASC 215 is a presentation topic. The statement of shareholder equity tells the equity movement story. The basic logic is beginning equity plus increases minus decreases equals ending equity. Dividends normally reduce equity because they reduce retained earnings. ASC 505 gives deeper equity guidance after ASC 215. And finally, equity is not the same as cash. These 6 points are enough to build a strong foundation for this small but important topic. That completes our ASC 215 MCQ practice video. You have now tested the purpose of ASC 215, the equity movement formula, the balance sheet versus equity statement difference, common equity changing items, the link to ASC 505, and the misconception that equity equals cash. If this practice helped you, please like the video, share it with your colleagues, subscribe to the channel, and support this learning journey. In the next related lesson, we will move into ASC 505, Equity, where the deeper equity accounting begins.